Hello, the Stockhead faithful. Good to be back with you again. This week we'll be talking about a Victorian gold explorer that's been getting some impressive results in a prolific mineral field. First onto markets, plenty of volatility out there. The big news obviously gold punching through 4,000 US an ounce. Plenty of chatter about its next move. Goldman Sachs are projecting 4,300 to 4,900 US an ounce by late next year. May well get there sooner at this rate. ETF purchases are continuing to drive the gold price. I mentioned last week over 50 billion US in ETF purchases this calendar year. Central bank buying is continuing at around about 80 tonnes a month, and according to Morgan Stanley, that should continue. Eye-watering margins from the Aussie producers, with gold well over 6,000 Aussie an ounce. So never been a better time to be in gold. On the copper front, plenty of activity there. Copper punching above $5 US a pound. Plenty of supply disruptions out of there. Most of you would have been following Freeport-McMoran, which had a mudslide there, about 800,000 tonnes of material. So they've cut their guidance by about 35% into next year. Flooding at Kamoa-Kakula copper mine owned by Ivanhoe in the Congo, and Codelco having a cave-in July, which remains closed. So plenty of supply disruptions. Barrenjoey are projecting around about 900,000 tonnes of copper are taken out of the market next year. So it's pretty tight. Expenditures getting into gear. BHP is spending another $800 million at Olympic Dam, looking to increase production next year from 1.7 to about 2.7 million tonnes of copper, and looking to double production over the next decade. Finally, on uranium, just starting to see a bit of momentum in the uranium space. Plenty of activity in Canada on the ground acquisition front. Uranium trading just above $80 a pound. A few supply disruptions there. Cameco's projecting a 20% drop in production out of their MacArthur mine in Saskatchewan. So keep an eye on uranium. It's not there yet, but I think next year could be its year. Onto the stock of the week. One I haven't mentioned before, Falcon Metals Limited, ticker is FAL, headed by former geologist and line selection fund manager Tim Markwell, chaired by Mark Bennett, who, as many of you know, was the former MD of Sirius Resources. So pretty good board. The Blue Moon project sits to the northwest of the Garden Gully anticline, which is basically the Bendigo goldfield. Historical production at Garden Gully is about 5.2 million ounces at 15 grams per tonne. The company's been sitting on this project since 2021, covers around 174 square k's. The Bendigo mining project just to the south still has a moratorium on it. 25 kilometres to the west sits Fosterville Mine, which many of you would have followed, a very high-grade mine, so the provenance of this area is extremely good. Targeting down plunge extensions of this Bendigo zone, which has never been explored. They published some pretty impressive results, 1.2 metres at 540 grams per tonne, 0.3 metres at 185 grams per tonne. They're drilling wedge holes, so they've got a parent hole and drilling additional holes, trying to hit more fold hinges and spurs, which is the classic type of mineralisation you find in the Bendigo area. They've mobilised a second rig this month, which is going to test the northern strike on 200-metre step out, so that'll be very interesting to see what they come up with there. They recently announced a sixth wedge hole. It's 6.5 metres at 33 grams per tonne, 55 metres east of Garden Gully. They've also got approval for another 7 additional holes at Blue Moon, which will cover around about 2 kilometres of strike. So while it's not cheap, it's very high grade, and if you're following the gold price and you look at the grade, the historical grade around 15 grams a tonne, that should deliver a super profit if they can delineate an indicator resource here and move this into development. Anyway, that's all for this week. I look forward to speaking with you again next week.